A lot of reporting, etc., which said that you were involved in the recent big Vedanta block deal as well. Were you guys involved in the deal?
No, we were not involved in the deal at all. So I think it's kind of amusing to see almost every deal our name comes up. So there's no point denying every deal because there's a deal every week. So no, we were not involved at all. We didn't buy a single share.
I see. Well, were you sort of talking to them at least, or there was nothing at all? I mean, you were not.
Well, look, I mean that's our job. We meet a lot of managements,
okay.
And we look for names where there's a little bit of sort of perception gap and the structural assets are good. So we talk to a lot of people all the time, but that was kind of very specific announcement. But there have been cases in almost every QIP, our names get dragged in for some reason. So we can't keep denying everything. So
to press that point just a minute longer, have you taken a look at Vedanta? Any thoughts? I mean, that would fit that criteria, right? Gap in perception, good assets.
Look, I think we have looked at them, but at this point it'll be sort of inappropriate to specifically comment about names where we don't have existing position as such.
PSUs are the other space, Rajiv, which have done phenomenally well, right? That's another area where there has been a sea change as far as perception is concerned. You own large names like SBI and NTPC. Have you looked at others in any areas where you think, which you think will do very well? I know for a fact that you think there's this, oil and energy markets are in for a structural bull market. A lot of exposure in the PSU space there in that area, and stocks have done well. Your thoughts, Rajiv?
So we looked at the oil names, and if they were more liquid, larger liquid, probably would have bought them because for the last 2.5, 3 years, we've been very positive on a lot of PSUs. I mean, include State Bank of India, NTPC, Power Grid, and we own in some small and large way. I think some of these are basically look at our size and scale. We can't execute because sometimes blocks are not available. By the way, LIC is the same one. We would have loved to buy that. We couldn't find any blocks early last year. So I think some of these are just hard to execute from our vantage point because we like to run very constant book. But I think one thing which is, and these were not simply cheap. What we saw was just much more tighter management. I mean, if you look at NTPC, we quite like how the current management has done a much better job versus historically. So there's this sense of urgency you're seeing in a bunch of these, and I think they're also getting a lot less intervention from Delhi, which was a chronic problem historically, right? So in last 10 years, the intervention has gone down dramatically. In fact, they pushed to hire some very competent people, a lot of these companies. So I think long term we like these, but obviously today a lot of them are done well. We still like them, but our problem sometimes is that we like to run constant portfolio and just hard to execute because those blocks are hard to find. But otherwise, I think, and as you know, these things are very under-owned by vast majority of foreign investors too, because there's this perception there that state-owned companies are always bad. Nothing is always bad, and nothing is always good for that matter.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.